Moving on, I think post AI, we have really been hearing this phrase from, especially from investors, that SaaS is dead, right? Now, of course, you have been doing SaaS investing for many years now, and now you're seeing this transition into AI. What are some of your observation in terms of how SaaS is evolving pre and post AI? What is staying the same and what is changing?
I wrote a blog post a few weeks ago saying, "Is SaaS dead?" And the title says, "Is SaaS dead?" It depends on who you are asking. So if you ask a founder, they will freak out, right? That I thought this is the place where you can actually finally build a real sustainable business, because in B2C, you like throw out 15 ideas, one stick, and then if you get lucky, then you build on top of that, right? That's how it works in B2C. But in at least B2B, there was a method to the madness. And now you're saying that, oh, this gets disrupted, it is dead. Then a lot of SaaS founders freaked out. Like a lot of people actually came and freaked out personally to me saying, "Oh, what are you saying?" So that's the first thing about if you say SaaS is dead, because founders are still having conversation, revenue is still getting created. It is slowed down compared to the last 2 years, but still a lot of businesses are out there. So there was this one CIO I was speaking to a few weeks ago, and she said, "Oh, if you say SaaS is dead, then what will we go back to on-prem?" No, we are not going to go to the on-prem kind of world. Now, if you ask investors, they are, of course, saying, "Oh, I'm not sure what the future of SaaS is," right? Because if you look at it again from an India-US angle perspective, it's very hard to build another Freshworks, which is start from zero and go to $500 million of revenue or $1 billion of revenue. And people are finding it hard to imagine that. And the reason for that is that like in across the world, SaaS is proliferated so much. I think there are at least about maybe 75,000 SaaS startups, $250 billion of SaaS revenue. And practically, if you translate it to an independent enterprise, they have 42 tools. They're spending $500,000 on, let's say, a simple marketing stack, and they're not getting half of the outcomes out of that, right? So for investors, they are like, "Look, this is a complicated ecosystem. I don't know how you will enter this ecosystem and build a outlier business, which is what investors care for." And therefore, they are thinking about the world not today, like 10 years from today. They are imagining that and then saying, 20 years from now, can I imagine a SaaS company to go public? Maybe not. 5 or 7 years from now, can I imagine a SaaS company to go more than $100 million in M&A? Maybe not. That's the question they are asking. And usually what happens, Soumitra, is that most people, when they're debating and fighting, they're just having different horizons that they look at. What Morgan Housel says, right? Day trader versus a VC investor will say, both of you are wrong. They're just looking at different horizons. So the founder is looking at a different horizon. The investor is looking at a different horizon. The things that I'm hearing from the CIOs is that, yeah, they're also hearing this chatter, but for them, the issue is a little different. The issue is that they're just dealing with the mess of too many tools. And that is where they're saying, "Hey, what is the alternate to this?" So the conversation that I had with the CIO is more around saying, "Okay, look, SaaS is a pricing model. When you say SaaS, it involves some amount of subscription, some amount of repeatability, repeat usage. And that is something that you have purchased. And maybe some over enthusiastic sales guys have come and sold you 500 licenses when your sales for a 700 people organization, while your sales team is only 100. And then you say, 'Oh, what are we doing with this rest of the 400 extra seats that we purchased?' Then you're looking at utilization. So I actually feel for these folks, what they will start asking as a tough question to their vendors is, why am I paying as subscription for something that I'm not using? So that'll actually shift more from a recurring subscription model, and thanks to AI, to more an outcome model. And the moment you folks are going to start doing that, then the customers will demand that everybody do that. So for Intercom is doing that, right? So it is saying that, "Look, I'm not going to charge you on a seat basis, but you care about that support query not being there. So I'm going to charge you on an outcome basis." Now, over a period of time, we will see adjustment that will happen because of AI in the pricing model, in the business model. And that is the big shift that will happen, I feel. What are you seeing?
I think and this is one of my thesis, which is I think pre-AI, a lot of the SaaS was actually very incremental if you look at it, and especially if you look at it from the lens of cross-border from India, right? So you had a fresh desk, which closely followed on the heels of a Zendesk, and you had everything from payroll processing to like productivity, CRM, MarTech, right? Some sort of an ERP system, right? A lot of those kind of companies getting created. I think that, in my view, is basically going to become like services, IT services of the 90s and early 2000s, right? Because it's just a lot of that is going to become so simple that you're going to have these services companies, dev shops everywhere from Eastern Europe to Latin America to even from India and even from the tier 2, 3, 4 cities of India, right? Building these small businesses, right? Are they going to be very differentiated venture returns, $1 billion valuation kind of companies? Quite unlikely, right? So I think the real opportunity now is for what I call as differentiated software or non-incremental SaaS, right? Which is you have to go deep into domains, you have to solve deep problems because AI is solving a lot of your coding. It's solving a lot of your intelligence, right? Like the just the value of writing code to automate something, AI is going to do it. So there is no more differentiation in that. So the differentiation has to now come from deep domain understanding, really going to the L2, L3 level, right? Of things like automotive, manufacturing, oil and gas, energy, right? Really going and saying, okay, these are the problems, these are business problems which were probably pre-AI unviable, right? Like
Yeah.
you could not solve them, or even if you solved them, like nobody would pay you like $1 million for it. And that was your cost of solving it. Now, and we talked about the point of workflow compression and reducing friction, that viability is now just getting massively unlocked, where you have all this legacy data from 10 years in an oil and gas company. Now you can go in and go to town on it and figure out efficiencies and figure out things that can actually be unlocked as use cases, right? So that is where I feel is going to be the opportunity. And I think it'll require a little bit of shift from the classic Indian founder persona of, hey, let's build this out quickly. Let me take this to market quickly. There's a cost advantage that I have to really saying, I'm going to build expertise, right, in an area.
So you said something, I'm going to anchor to that and do a quick plug. I wrote this report 2 months ago on AI SaaS opportunity, right? So the two parts that you said, one is on the vertical, right? Go really deep into a domain. And I call that as the unsexy, boring vertical that neither the incumbent nor the Silicon Valley want to come and play, right? The spaces, right? So that is like a great place to actually go and see what can you solve using AI. But then the other part that you said is more around like making sure that there are outcomes.
Yep.
The services companies have traditionally been really good at outcomes, right? So they hire cheap engineering talent from wherever they can find. And then they do a great job of managing the customer's expectation. And anybody who actually does a services project is actually doing like largely because of that, they are able to just outsource their risk or ability to project manage to somebody else, and they just ask them question. And the Accentures, the McKinseys, and the Infosys and the Cognizant have actually built like large businesses doing that account management for large Fortune 500 companies. Now, with AI, the cost of development has actually become 100x lower. So they may not even hire these cheap engineering talent across different geographies. They can actually use these automated AI building tools and then do the same outcome to these customers. So that is one big opportunity, which I've also talked about in the report, saying that, $250 billion SaaS opens up to $1.3 trillion of services, right? So the software as a service and services, that category kind of merges. I call that a software and services. Different people are using different terms on that on Twitter, but this is the underlying theme of saying that, look, outcome focus, how you actually use software to give better outcomes so that the like the CIOs, the customers, they are not inundated with more tools, but they get more outcome. That's a massive opportunity.